Welcome back. Just keep an eye on a couple of stocks. There are signs of some buying at lower levels for the frontline index, and it's visible more in the Nifty as well as the Nifty Bank, more so on the Nifty Bank. So pull up the Nifty. It's mildly off the day's low by about 20-25 points, and you have the Nifty Bank as well, which is now sitting with a cut of about 230 points, which is slightly off the lows of the day as well. What is the common element between both of them? HDFC Bank. Just pull up that intraday chart and you would see that HDFC Bank has now moved fairly into the green, currently seen a recovery of nearly 2/3% from the lows and has moved to the high point of trade. The other couple of stocks which are doing well are the IT stocks as well. So if you pull up, the IT index, you would see that there has been a recovery of almost 0.5% from the lows on the IT index, just about breaking into the green as we speak, and that's on account of TCS and Infosys. So if this continues, these two are fairly decent weights on the frontline index, and given the shorts in the system and the kind of call writing that we've seen at 24,500, there could be a case for some sort of short covering, but for that we'll have to watch out for the market very, very closely. Amidst all of this, there is management that is lined up for you on the show today. Pidilite, consistent good performance continues in the first quarter as well, a healthy volume growth of near double digits. And we have the management with us. Sudhanshu Vats, who's the managing director of the company, joins in now. Sudhanshu, it's consistent near double digit volume growth as you've been guiding, even in a tough consumer environment. But now, as we hear from all the other consumer companies, things are improving. Do you think from here on you will do even better? Could you give us a sense?
I think Pidilite, as you rightly pointed out, has been delivering consistent underlying volume growth. And I think we've done that when the demand situation was a little tight. Even in the quarter gone by, the demand situation was slowly improving, but we've delivered a double-digit underlying volume growth with a revenue growth of about 10.6%. I think as the situation continues to improve, we remain equally buoyant and we will get advantages of that tailwind as and when it comes. So it should be able to lift it further as we go forward. Because as far as we are concerned, Mangalam, we are here to continue to strengthen our portfolio. We do a lot of work with our users and applicators, and we do that very consistently and on the ground and month on month, actually day after day, month on month, year after year. And we continue to bring in innovative, user-friendly solutions, and therefore that innovation in terms of our product pipeline, in our user marketing, and our focus on distribution and continuing to be pioneering in our approach will always help us.
Okay, that's surely interesting to hear, Sudhanshu. But what about the overall margin trajectory? This time you've seen a 100 basis point improvement there, even revenue growth of around 10-11% this quarter. What are we watching out for the full year?
I think when we talk of our EBITDA corridor of 20-24%, first of all, these numbers should always be looked in an annual context. As you know very well, that Pidilite business has seasonality. Our quarter one tends to be a much higher quarter compared to the other quarters that follow in the year. So therefore, we have, and especially for waterproofing business and some of those other things. So I think what you are seeing is our corridor of 2024 remains. Now, if you look at this 25.1% EBITDA margin that we've delivered at consolidated level, there is an advantage which will go away, which is that A&SP is a little subdued and percentage A&SP even more so because of the seasonality. We do A&SP or advertising based on what the brand and the business requires in that quarter. We don't manage it quarter to quarter. So therefore, that keeps going up and down a little bit, and that will change. And there is an advantage of that in this quarter as you see the numbers. I think the place where we will continue to see a little bit of advantage is that input costs currently are benign, and we see that scenario at least in the short to medium term, 3 to 6 months out. We are also beginning to see slightly more scale leverage as our volumes grow. So we've delivered an underlying volume growth of 9.9%, but our total volume growth is far in excess of that, a factor of 2+ actually. So therefore, the scale leverage as we continue to grow our business will continue to come to us. Having said all of this, we stay steadfast on our guidance on EBITDA corridor of 20-24%.
All right, 20-24%. You've spoken about double-digit revenue growth. Can you break that up for us, both for your B2B and your B2C business? Because if I remember correctly, last 8 quarters, B2B business has been doing double-digit volume growth, and it's actually outpacing the B2C vertical.
This is the 8th straight quarter of B2B business delivering double-digit volume growths, underlying volume growths. We are confident of sustaining that. We are seeing considerable momentum in our projects business, part of the B2B business. We are also seeing good momentum in our joinery business, which is basically the off-site furniture making piece, which is there. So we are seeing very good business there, improvement there. I think what is very heartening in the quarter, which is now here, and I think is somewhat reflective of improved demand situation you are talking about as well, is that our consumer and bazaar business has also delivered a 9.3% UVG Mangalam as I speak to you. And this is indeed one of the best consumer and bazaar performance in the recent quarter. So I think, so that lift is coming in. B2B will continue to remain strong. So as far as our UVG is concerned, Mangalam, for the quarter that has happened, what I'm very happy to report, it is a UVG that we've delivered across regions, across categories, and arguably across most products. So it's a very wide 360 kind of a performance, which is very heartening as we move forward.
Okay, all right, fair enough. So if we are seeing some pricing growth and double-digit volumes, can FY26 have low double-digit teen revenue growth?
So underlying double-digit volume growth with the margin guidance we spoke about. And I think you are already seeing a little bit of between 70 to 100 bips of pricing that is different now as we go forward, as we have come out of that cycle of having passed on all the prices. So yes, you are right. We could see as we go forward, if the demand strengthens, we will continue to see an improved performance from Pidilite. And I think what is very heartening, and I think for the quarter that has gone by, this gives me a lot of confidence, is despite all the global macroeconomic situation, the entire confusion around tariffs which has prevailed, and also the results which I've seen up to now of many large listed entities across sectors, I think we've consistently delivered. And as a matter of fact, we've upped the ante a little bit. We've delivered a strong underlying volume growth and a good revenue growth at good profitability.
Point taken, Sudhanshu. But do you think that tariff-related uncertainties could impact the raw material prices, or is it already baked in?
I think the raw material prices, from what we have seen, continue to remain benign. I think there could be some supply issues or managing those issues, but we are adapted that. I think how do you sort of plan for it? I think those are things which we will keep in mind. Our direct exposure to US in terms of tariffs is very, very low, as you know. We do export a little bit to US, but it's very small as far as Pidilite is concerned. There is a little bit of cascading impact of it on industries that export quite a lot, and particularly in our B2B business, industrial business. But I think we should be able to manage it as we go forward.
All right, you should be able to manage it going forward, so that doesn't, bring any more uncertainty. Let's talk about the two new businesses. One is the paint business. How's the performance of that been like? Can you give us, any specific numbers out there? And the early response to EVs and electronic adhesives in which you have announced a foray. Could you give us a sense of what your total addressable market here is?
On Haisha, the good news to share with you is that we are consistently growing quarter on quarter, month on month, across the 5 states, largely southern states, where we are there, where our pilot is happening. We are focused on rural and small town India, and I think we will continue to remain focused in that space. So the good news is that we are growing month on month, quarter on quarter, but I think we still need to do a lot more work on fine-tuning our business module, establishing our clear right to win, and what more work we need to do with users, the classic Pidilite mantra and our DNA, as to how do we become better at that as we work with the applicators, even in this space, so that we have a competitive advantage. So I think we are going to fine-tune that for some more time before we fully scale it up, but the progress is good. That's on paints. I think on electronics and EV, once again, we basically now are in contact with, or as I speak to you, some of our products are getting specified or sort of are getting tested for specification more accurately along the large electronic manufacturing services, EMSs, contract manufacturers, and many EV players as well. So I think we are making good progress. In the quarter that has gone by, I can share with you, we won one additional large EMS account. And that's heartening. This is a journey we've got to stay steadfast on, Mangalam. And I think we will build on it slowly but surely. And I think this is a big opportunity which over a period of time will play out as we go forward.
Okay. What's the TAM for electronics adhesives? Have you put an aspirational target there?
So I think if you look at the electronic adhesives market, the way it could go to 2030, assuming a lot of manufacturing comes into India, it will be a sizable market. But I will be a little careful in giving a number, especially at this juncture, with all the discussions happening on global tariffs and how this will eventually play out. So therefore, it is a sizable number, though, I can tell you. It's an attractive, sizable number. Where there will be multiple players, because it's also a very complex space, even for anything, even if you look at mobile, the number of additional places, thermal padding and all that which you need to do. So we will be one of the formidable players in this space, but there will be many. And I think, both international and perhaps a few local. But I think that's the place we are very watchful of. It is a large market, potentially a large market as we go forward.
Okay, all right. We're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's the management of Pidilite saying that the demand situation did see a marginal improvement in Q1. And the stock, as you can see, just about higher by around 0.2%. We need to take a short break, but as we do that, a short note, remember to tune in to the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists, shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m.